All right, good afternoon, guys. It's Richard. It is 12:15 Central Time on Sunday afternoon and 1:15 Eastern Time. I'm making this video about crude oil today to kind of show you a trade I took on Friday morning, and then crude oil. That was the only trade I took on crude oil on Friday, and it was a winner. But I'll show you what it looks like, and then we'll kind of pick apart the rest of the day's price action because I actually got in on the smallest move of the day, and I'll show you where some of my confusion was, and what kind of kept me out of it. So, all right, so here we go. I've got it in market replay. I get to my screens a little bit late in the mornings. I've got a event that I do every single morning that does not involve trading, but I get to the screen about the time market opens at 9:30 Eastern time. Sometimes just a little bit afterwards, between 9:30 and 9:45. So what we have right now is that I'm at 9:25 this morning on Friday morning. That's where this is, and I was here in front of the screen. I was watching price action. Oh, one other thing. You can see that these colored candles, these are different, right? You haven't seen these yet. This is just still part of this DMN's AMD goldback indicator. And all those is depicting, the busy and the SIBI, okay, which that stands for buy side imbalance, sell side inefficiency, and sell side imbalance and buy side inefficiency. ICT has some videos on it. The way I think about it, he doesn't say it this way, but the way I think about it is that basically it has a fair value gap on top of a fair value gap. And you can select it here in the indicator by just checking SIBI and BISI, but you have to also make sure at the top that you have imbalances checked, okay? And it'll show, if I take that off and I deselect imbalances, you'll see that it goes away. Either my computer's running slow today or the indicator is, but you can see the candles, the colors went away. So I'll put it back on, and then it'll pop on here in just a minute. So let's keep going. All right, so I'm going to start the market replay, and I'm just going to advance it one at a screen at a time. So we're clearly in the mitigation block area. And I just got into the screen and I'm like, heck, man, is this a mitigation block right here? I don't know. Because I always think of these as like we have to sweep external liquidity, and I don't think we do. This is an internal liquidity sweep. We're clearly in an uptrend because when I got here Friday morning, we had broken structure here, and you can see it was holding that level pretty good. But anyway, the thing that really caught my eye is that price was holding the bottom of the mitigation level. So I'm like, okay, I think we're in a good place. Let's look for a mitigation block. Now, in hindsight, you can go down to even a smaller time frame, and you can see a mitigation block here. But that was not. I just got to the screen. I wasn't about to take a trade off of what I'm seeing right now. All right, so let's keep advancing. And all of a sudden, price is moving away. It's creating a bunch of buy side imbalances. But remember, for a mitigation block, I need to see some internal sweep or an external sweep, and then a mitigation block to form. Still nothing. And so I'm just sitting here, sitting here, sitting here. All of a sudden, we had an internal sweep here, okay, on this spot right here. So then I started getting interested. I'm like, is there going to be a mitigation block that forms? Yes, this is a mitigation block. So I'm going to highlight this and see if we get a retest in here. And we do. All right. So I had entered, I think I still waited. I think I entered somewhere around the 77.20 area. And the reason for it, I'm hung up on crude oil, that crude oil likes to reverse on the 77.20, or excuse me, on the 20 cent level, the 50 cent level. the 80 cent level, and the 0. All right. I don't know why it just does it all the time. Here's an 80. Here's a 50. You know, and it's not, sometimes it's exact, but not all the time. Anyway, so I had already marked out earlier, and it was when I got to the screen. As you guys know, I'm trying to incorporate the Malaysian S&R levels on like a 4 hour, sometimes a 1 hour, but I've already done that on this screen here. I had marked out this morning 77.63 as a possible point of interest of where price could go to or where price might reject from. The reason why I picked this level and not any of these others is this had a break in structure, and it's the left shoulder that price likes to go to, right? That's going to be for maybe another video, but this is just some insight on the Malaysian. If you and you look, we're clearly in a 4 hour time frame here, and I put it on the line chart because it's just really easy to see at that point. Okay, so let's go back. Remember that number 77.63. So I'm in the trade. I'm looking great. I'm already up, I don't know, 30 ticks. Let me scroll down a little bit. As you can see, I marked it on the 77.63 level, and I think I had my target at 77.60, and then we hit it, and then we reject it right off the 77.63. Now we're in the breaker block area, okay? From this level on up, it's the breaker block area. And so I'm like, if this is gonna reject, I'm looking to enter on a breaker block, okay? And I'm saying, is there a breaker block in this area? Excuse me, from here on up here. And I'm like, yeah, it's right here. If price was to come and go through this, this would be a breaker block. Okay, so let's advance and see what happens. Oh my gosh, flew right through it, and we have a bunch of sell side inefficiency here. All right, I'm like, great, I'm fixing to get another trade. I'm sitting here looking at it going, all right, here's the bottom of it, but here's an imbalance here, or a void, and here's a void here at the top. Man, this is just too easy. I'm all over this. So I'm sitting here waiting and waiting and waiting. Price just kept moving away. And I'm like, what the heck? Why? Sure, you were supposed to go up there and tap into that breaker block. Why did you not do that? So I'm just sitting here confused. All right. Price is running away from me. And I'm like, oh, well, I still have more to learn, obviously. So we're getting back down to the equilibrium area of this particular partition. We've hit it. And I'm like, okay, so what's going on? So at this point, I'm looking for some place for price to stop. And I looked and looked and looked on larger time frames, and I didn't really see much. And I'm like, I'm just so confused. All right. So I'm still advancing. Running out of screen space here. And all of a sudden we go, hey. But there we go. We just broke market structure right here. Okay. See that? This low was created by that high. And I'm like, great. Now, this is where it gets interesting with the buy side and the sell side stuff, okay, on the inefficiencies. Now, I did not take this trade. This is just in hindsight, all right? We came back in and tapped into this buy side inefficiency. This one had already tapped into it, see? It doesn't say you have to just go all the way and mitigate the entire thing. It's just, will it tap back into it? And I think that would have been a good entry. Let's see if there's another one. All of a sudden, there's another one created. That's mitigated where it is. And all of a sudden, price just starts, ripping. Now, I would have never thought of this being one, so I can't say that. But this definitely, and this area right here definitely. This and this would have been maybe some entry points for you. But the risk, where would you define the risk? I would have just a set, like I'm only going to risk below this inefficiency here. So what is that? That's about a little over 10 ticks. So that may be too rich for some people. I don't know. But I did not enter these trades. Okay. I'm just showing it to you. So I'm thinking about this breaker block up here, right? I'm like, oh, here, we're going to go back into this breaker block. So, man, I'm getting excited again. And I'm watching and I'm watching. And all of a sudden, I'm like, yeah, there's a rejection. And then all of a sudden, boom. And I took a small loss on this, guys. As soon as I saw this rejection off the CE, I was like in. And then out. All right, I was like, crap. All right, let me give us some more screen space. And now I'm just like, what is going on? What? Price just keeps ripping. Okay. I'm like, okay, well, it's going to go up here to this liquidity void area, and then it's going to pull back. And it didn't. And then all of a sudden, it dawned on me that, and I'd never paid attention to things like this before. This breaker block, it should have reacted to it. And it didn't, because it's in the gold block area. Okay. And I got to thinking, well, what about we'd have inverse fair value gaps, and we have breaker blocks that were once order blocks. So why couldn't we just have a breaker block be inverse? Okay. And that's what happened. Okay. Now it's at the end of the trading day for crude oil. It's going to end right here. Okay. So I'm just sitting here watching it, taking notes and saying, okay, note to self, this might be something that I want to look at and continue to look at on back testing to see if there's any other times where breaker blocks in the breaker block area get blown through. So far, you guys know I love breaker block areas, and you know I take trades off of it. And so I'm like, heck, is there another opportunity here? And so just throwing that out there to you. Um, to me, on trading, mitigation blocks are my most difficult entries, and also rejection blocks are my most difficult entries because I don't trust them, because they don't break market structure. Um, they usually just take liquidity. Sometimes they break market structure, but most of the time it's just take liquidity, then form another order block, which is a mitigation block. So, all right, guys, I hope that's helpful. I added a new chat to the Facebook group, and it's just questions you may have about Gold Block. I had a new member who wanted to ask some questions, and I thought, you know what, let's just throw it up on the forum there. And if you have any questions regarding this, I'm always going to point you towards Hoppy's ebook, because that's where I learned it. And again, he charges for it. I mean, it's his information. But if you can get some information from me here, and I'll answer any question that you have. I'm just not going to give you the ebook, because that's his proprietary information. But I'll answer any questions that you have. And then there's another resource that I use a lot, and that's AirCam Trader on YouTube. All right. His whole YouTube video is just basically taking gold block levels and then overlaying them on ICT's trades. So where an ICT does a live trade on YouTube, he then lets it, he takes that video and then he puts it onto his gold block levels and kind of describes what's actually happening there. And ICT says he doesn't use gold block levels, and I don't have any reason to say he doesn't, but I can tell you that gold block levels follows directly along the lines of his trades. All right. So it's interesting, to say the least. All right. Anyway, so that's it, guys. I hope you've had a great weekend, and I'll be around trading this week. I haven't looked at the news events yet, but I think FOMC is this week, but I'm not positive. Anyway, talk to you guys later.